morning, everyone. So yesterday we said that there was some payroll changes, and then we're going to get into some of those. So we'll get into some of those right now. I won't go into too much detail, but I will give the general overview of some of the things that are changing. Okay. If an employee is terminated or quits, the employer has to pay that person either 10 days after the regular pay period, or 31 days after their last day worked, okay, whichever the employer chooses. The 31 days after the last day is what's been added. The 10 consecutive days after the pay period is what it always has been. Okay, so that's the change. Now, normally employees have to give written consent, okay, to their employers in order to deduct certain expenses off of their paycheck. There's an exception to that now. If the employer has overpaid an employee, maybe through an advance or something like that, and then that employee ends up being terminated or quits, the employer no longer needs to have written authorization to deduct that amount from their employee paycheck, and that makes sense. If someone's paid, someone's paid $1,000 advance on the 15th of the month, and they end up quitting the day after receiving the advance. Now, for that paycheck, the employer can deduct that amount off of the amount of the paycheck for that month, which again makes sense. Vacation pay. So there's going to be some calculation changes. Yay! We love that the government, doesn't matter which government it is, keeps changing the rules and confusing business owners. This one, in my opinion, doesn't do a whole lot to improve the situation. But anyways, so right now, vacation pay and general holiday pay is actually included in the calculation for general holiday pay. So prior to August 15th, it was 5% of the prior 28 days of employment that was paid on the general holiday. Okay, that included other general holidays. Now, the most common occurrence of this is New Year's Day. So New Year's Day is a general holiday. So is Christmas. Christmas would be one that is included in the general holiday pay of January 1st. And yes, that was confusing and didn't make much sense. So they took that rule back out. Okay, so you no longer have to include vacation pay or general holiday pay when you are calculating the general holiday pay for that employee. Now, general holiday pay is no longer 5% of the last 28 days. It is the average daily wage of either the 4 weeks prior to immediately preceding that stat holiday, or it is 4 weeks prior to the ending of the last pay period that immediately precedes the general holiday. Okay, so it's either 4 weeks from the day of the general holiday and you take the average daily wage, not including vacation pay or general holiday pay, or it's 4 weeks prior to the last pay period ending date. Okay, so if the holiday is on, let's say, November 11th, you can either go from November 10th and 4 weeks prior to that, and if your pay period ends on, say, the end of the month, then you can go either November 10th and forward, or October 31st and forward. Hopefully that makes sense. I know this is a little bit longer video than normal, but we try to be as brief as we possibly can. We might get into just a little more detail in each one of these situations. Not sure yet. Depends which way the world turns. Hope you learned something. Take care of yourself. Take care of your family. Take care of your friends. And be well.